I suppose that was hit. Yeah, that was hit. Now it's just seeing some profit booking dip. I would suggest you can continue to hold. What was the buy price again, Puneet? I'm sorry.
The buying price for this one, okay, I've scrolled down.
No, not an issue. Not an issue. I would suggest
it was 381. Sorry, yeah.
381. Yeah. So slightly elevated, but not an issue. You can continue to hold. 350 or thereabouts is where you can keep your stop losses.
All right. Okay. So that's the view coming on Sunflag Iron. But I think Nishant has next query. Who's writing us from Gurugram, asking about Max Healthcare. He's holding around 50 odd shares. The levels of 1040. Shaina, a good hold.
Yeah, it's a good hold. It's very well managed, expanding fast, but it is expensive. So if you're holding it, you have to be holding it for at least a year or more. In the shorter term, I think valuations are pretty expensive. They're doing pretty well. They're it's got 5,000 plus beds, and I think the growth also is going to be good. But valuations are slightly on the higher side. So if you want to buy on dips. But if you're holding, you can hold it for the longer term.
Correct. The next one question is on CG Power. Padma from Bengaluru holding shares at 895. Asking a short to medium term kind of view if she should still continue to hold on to this counter.
But if you're holding, you can hold it for the longer term.
Correct. The next one question is on CG Power. Padma from Bengaluru holding shares at 895. Asking a short to medium term kind of view if she should still continue to hold on to this counter.
You can continue to hold this one. I don't see too much of a disturbance of the primary trend at the start of this year. So obviously some consolidation, some profit booking was to be expected, and now it's again resuming its upward journey. Not too far from your buying price. I would suggest continue to hold. Recent swing 825. That should act as your stop loss. If that is disturbed, then the trend goes for a toss. But up until that, continue to hold.
Interesting. Okay, so that's the view coming in on CG Power. The next one that we have is coming in on. Okay, this is already taken. The next one that we have is coming in from Mr. Bala, who's writing us from Coimbatore. Looking to enter Bharti Airtel is what he's saying, and wants to know if this is the right time to make an entry for the next 2 years. Shaina, would you recommend that?
Yeah, I would say that yes, you can add. In fact, they are structuring in terms of their plans also, and discontinuing some of their lower end plans. I think ARPUs will be better over the next 1 to 2 years. Africa business also should do better. So I would say that it's a good segment to a good sector to be in, and with a 2 year holding, 3 year holding. So I would make an entry at any dips that I get.
Correct. Let's now start the rapid fire round in this edition of the show. Kosh as well as Shaina, you know the drill. First question on GE Power, Shaina. Utkarsh holds shares at 780. It's seen a massive run up in the last year or so. Should he still continue to hold?
I would say it's a hold, yeah.
Okay, the next one is on Apar Industries. Our viewer has been holding 21 shares since the IPO price and wants to know whether to continue to hold or sell this one. And that was around 30 is what he's saying. I'm not sure of the price.
It's at 14,000, 17,000.
Yeah, exactly.
Right,
I mean, it is crazy if that's the right buying price. But I don't know whom to come to, but Kush, what should he do?
क्या ही बोले तब से लिया हुआ है. No, you should continue to hold. Even the near-term structure is positive. Massive, decline could be below 13,000.
Got it. Well, I think the last time I can see it was in early 2004 when that price was there. But what a move, and kudos to him for continuing to hold this as well. The next one's on GE Vernova. Lunar from Chennai is holding shares at 4,700. Shaina is asking if he should still continue to hold. How do you look at the valuations now?
Valuations are expensive, very expensive. It's even on EV by EBITDA basis on any parameters. But the order book position is very strong, and they continue to get orders. I would say that yes, you can hold. After this huge run up, I think it is going to go into a bit of consolidation. So you can hold, keep a stop loss close to about 4,000. If it goes below that, it is better to switch.
Right.
Okay, the next one is on Lupin. Prasad from Kolkata is holding 25 shares at the levels of 2450. Continue to hold. Sell. Kush.
There is profit booking, but till 2200 is held, you can continue to hold.
The next one's on Fortis. A viewer holding shares at 980, Shaina, and asking if he should still continue to hold.
Yeah, he should continue to hold. In terms of valuation also, is one of the attractively priced hospital stocks.
Okay, Exide Industries is the other one. Dilip Kumar Rathore is holding 100 shares at the levels of 310. Hold or sell, Kush?
Good stock, good move right now. Definitely hold. Stop loss about 450, 460 zones.
Next one's on Reliance Industries. Our viewer bought shares at 1376, and this is Raman. He wants to know, China, if he should still continue to hold. What would be your view?
Yeah, Reliance, of course, you continue to hold. We are likely to see a good listing of Jio, and that could give you some liquidity. So I would say that good Reliance, some liquidity. I would say hold.
And the next one is on Axis Bank, Kush. We talked about HDFC, ICICI and SBI, but what's your view on Axis Bank?
Yeah, why not complete the circle, right? No, it slipped below that support zone of about 1220 and 1225. So I would be a little circumspect at the moment on Axis Bank.
Got it. The next one coming through, and this one's on GE Shipping actually. China wants
Circumspect at the moment on Axis Bank.
Got it. The next one coming through, and this one's on GE Shipping actually. China wants to know about the next 2 years, if it's still a good time to buy right now.
Well, the numbers were very strong that we saw for the quarter. And I would say because freight rates are continuing to remain high, it should continue to do well during the rest of the year. So yes, you could be buying, but I would say buy it at dips.
Okay, the next one is on NCC. Shaina Sumit from Bilal wants to know whether they can continue to hold this one. He's bought it at the levels of 170.
Yeah, I would say hold valuations are okay, and it's one of the better stocks in the construction space. So it's a hold.
Kush, let's also complete the circle on auto ancillaries. Endurance Tech is the next one. Our viewer Sushant is actually saying that stock could have had a breakout now. Is that what you also see, and what would be a target on Endurance Tech?
Totally agree. The number for the breakout is actually 3050. If that is broken out, the stock will see a massive run, not that it already hasn't for the last 6 months.
Yeah.
But if that happens, I think 3300, 3450 very much on the card. So good read on that.
The next one is on Vidya Wires. We get a lot of queries on this one. It's a very small company, Kush, but any view on the charts? Our viewers bought it at the levels of 92.4 is what Puneet is saying. What would you recommend?
That's not me.
Yeah, not him.
You could ask me offline if it were you. No, I don't have a read on this, so I'd give it a skip for now.
Okay.
Well, the next one is on Emphasis, Kush. Sandeep holding shares at 2,500 and asking what he should do with his 50 shares. It's been an underperformer, but what's your view now?
You can continue to hold. It's holding about the 200-day moving average, and got a few things going for it volume-wise as well. 2400 stop loss.
Okay, the next one that we have is on Laurus Labs. Madan from Hyderabad wants to know if this is the right time to make an entry for the next 2 years. Shaina?
Well, yes, you can make an entry, but buy it at dips because the stock has run up a lot. So I would prefer to buy it at slightly lower levels. And then you can hold it for the longer term. So lower levels, I would say somewhere close to about 1,750, 1,700, those type of levels.
Got it. Okay, so that's the view coming in on Laurus Labs. But with that, completely out of time on this edition of Fast Profit. Kush and Shaina, as always, thank you so much for taking out the time and helping us navigate through all of those questions that you tried to answer. But viewers, with that, completely out of time on this edition of Fast Profit, but definitely we'll be taking more questions at 2 p.m. Do stay tuned in. KYC comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी की टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hello and welcome to KYC. You're watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, good stories, and also have they made alpha for the investors or not. Today also I've got a very interesting company, and this time I've picked an auto ancillary company. But before that, try to guess it. And yes, there is a welcome change. It's not from Pune, it's from Gurugram. It's that Gurugram based auto ancillary company. First hint. Second hint. The company is a leader in locking systems and rear view mirror. That's where they're having a high market share as well. I'm sure you're trying to guess the company's name. The stock is already a multi-bagger 3 times in the last 3 years itself. Also, one more hint I'd like to give you, and they're targeting a 450 crore PAT in the next 3 to 4 years. You know, this is something which we are all wondering. The company's name is Sandhar Tech. This is the company which we are talking about. This is where we'll do our entire research and also talk with the management to show what lies ahead for the company. But going ahead, what are the key questions to be asked, especially on the margins front, because there has been a little bit of concern in the dip, and will that normalize going ahead? Second important question or the query is the new projects timeline and progresses. Are they coming in the right time? Is there any delay or is there any preponement? Smart locks opportunity, the company is already there in the mechanical locks. So what opportunity does that come? The TAM, which is nothing but the total addressable market value. They have a lot of JVs, especially with foreign countries, and EV segment growth outlook. That's also we are seeing a very important move. Merger acquisition opportunities is especially important for auto ancillary companies in India. The way they are expanding their product shares or even the wallet share of the existing clients. The PAT target is 450 crore rupees in the next 3 to 4 years.
what will be the reasons why the company is talking about this target. That would be something we should try to understand. And rarely this management talks to media, and we are having Jayant Davar, the chairman and MD at Sandhar Tech, where he'll open up about his journey, the company's growth plans, and of course the industry which is showing a strong tailwind. But let's understand the company. What does Sandhar Tech actually do? Largely, in both two-wheelers as well as four-wheelers, they have their key products. I'm going to give you those breakup, but you have to stay with me. The company is, of course, the Gurugram-based auto ancillary company, and they cater to the OEMs. They are leaders in the locking system and the rear view mirrors. Just look at how this is. This is nothing but, if you have a two-wheeler, this is where the locking system comes in. This is mechanical in nature. So this is important. You can take a screenshot and understand what I'm talking about. But moving on, let's also understand that the company makes analog to digital converters. These are the converters coming in for the locking system, and also the sheet metals are there. These are the products around this segment. They have 41 manufacturing facilities. So you can imagine there is always a replacement capex, be it any big amount is coming or not. They have delivered a mixed set of Q1 numbers right now, but let's get into more details about the company. And the company's consolidated debt stands at roughly 948 crore rupees. Is that going up? That's the big question. But yes, company is expanding also. 60% plus revenue comes from the two-wheeler segment, and that's why a lot of products which I mentioned are from the two-wheeler space. Also, 6 JVs with Japanese, Taiwanese and South Korean companies, and that is where the R&D angle also comes in, where they can increase their product profile as well. Also, looking at the geographical revenue breakup, it's very interesting. Export is just 14%. That means the market is so big in the Indian market, talking especially on the locks front. 86% of that revenue is just coming from that segment. So this is an important point to actually note down. But key clients, you name it, these are the bigger clients: Hero Moto, Tata Motors, M&M, Ather, JCB, to just name a few. Across the segments, they are delivering, or you could say they have exposure to the major clients, actually all of the major clients, to be honest. If you are studying the investor presentation, 8400 crore opportunity is there for Sandhar only for smart locks. They have roughly 70% of market share in this segment. So that is the calculations which we have done for Sandhar. But let's move on from smart locks, looking at the story of how things are panning out. This amount is pretty big. Look at that. 70% of all two-wheeler locks are done just by Sandhar. This is a very important, you could say, fact. But going ahead, what may work for the company? This is important. They are having a stronger return profiles. If you're even checking the ROE and ROC numbers, you'll understand, especially for an auto ancillary company. Analysts remain bullish. We are going to give you the total analyst coverage also, but that will come in KYC ratings, not now. Third reason is the market leadership they're having in the two-wheeler segment. The way they are introducing new products, that is where the street is liking it. Also, they have guided for a 450 crore of PAT in the next 3 to 4 years. There is, of course, in a conference they had mentioned, so we'll understand that. And the larger market opportunity comes in smart locks, which has not yet even scratched the surface. Let's also talk about what may not work for the company. Higher net debt equity ratio is there, so a little bit of concern definitely comes in, or pressure on the balance sheet, as we say. Second reason is the higher receivables. The collection period, especially on a consolidated basis, is definitely, you could say, some pain is there. Execution risk might be there for key projects because a lot of moving factors are there and the new initiatives are going on. Also, I would like to point out one key concern which is there, which may not work for the company, is the higher raw material costs. We already saw that in the Q1 numbers, and maybe there can be impact in the second quarter, but we'll try to get that from the management as well. So this is the entire picture for Sandhar Tech. But let's understand, what are the key KYC ratings which we generally give to a company, where we judge their overall numbers with. We have income statement, balance sheet, cash flow and return ratios as well. We'll give you all the entire picture over a period of time. How does shareholding pan out? How does the street cred pans out? That's what we'll try to understand, and the valuations and the analyst take also. These would be the key rating parameters where we will be judging Sandhar Tech. Let's talk about the first rating parameter, that's the income statement. And largely, The income statement has done well, both revenue, EBITDA, net profit. The CAGR numbers have been really strong. The top line numbers or even bottom line numbers, especially on a 3-year CAGR basis. But yes, Q1 numbers, there was a dip coming in the margins, but nevertheless, it was pretty decent enough. It's not that bad also, especially last 3 years. It's still maintained in that 9 to 10% band as well. So in the long-term perspective, it seems like it's business as usual. So income statement, I have given this, a strong thumbs up as well. But balance sheet, a little bit of stretch is definitely there. The borrowings, however, has come down. The net debt to equity ratio is slightly on the upside, but there's a decent cash balance also. So I'm going to give this a neutral rating as well. So we spoke about the income statement, we spoke about the balance sheet, but let's try to understand the cash flow and understand how the operating cash flows are panning out, or is there any change. But largely it's kind of neutral, but yes, there has been a dip. Actually from FY24 onwards, the dip is coming in for the last 2 years as well, but the conversion has also come down a bit. But nevertheless, it's not that alarming also. A little bit of working capital stretch is also something which we are seeing. So it's a neutral rating from my side when it comes to the cash flow segment. Let's talk about the return ratios. I had mentioned you that the company is having strong return ratios and it's growing. The ROE trend, FY22, the way situation was panning out, it was down 7%, but then the momentum started coming in. Look at that ROE numbers, look at the ROC numbers. Let's get that number as well. We're seeing a good growth coming in, and this is coming actually repeating itself for both of these categories. So return ratios is strong, thumbs up as well. But let's talk about shareholding. What's happening here in shareholding? There are some divergent trends. Promoter stake is unchanged at 70%. A slight increase for the FIs when it comes to their numbers. From 1%, it has doubled to 2%. While for DIs, it's largely similar between that 16 to 15% mark. So it's a neutral rating when it comes to the overall shareholding. Let's talk about the street cred. What are the stock moving around, from this segment, how the stocks have done well over the last 5 years, or maybe say March lows, and this has been a multi-bagger. Last 3 years, the stock is up 3 times for Sandhar Tech. If you look at the last 5 years, not so much it has done, but it's decent 128% returns. But in the short term, medium term also, they have made money for the investors, and this is what the data is suggesting. So I'm going to give this street cred a strong thumbs up as well. Let's talk about valuations and understand what's happening here. Currently, the valuations are at similar levels with their 5-year average levels. This is of course the 12-month forward PE ratio, and as compared to the industry, it is still on the cheaper side. Also remember the peak which was their valuations, that went as high as 25 times. So definitely the stock is trading, you could say, fairly priced or slightly cheaper if you compare them with the industry. So I would say the valuations are still attractive for Sandhar Tech right now. So that's why I've given this a strong thumbs up. Analyst take, totally 5 analysts are tracking this counter. Not even a single one has either a sell or a hold rating. All of them have a 100% buy rating, and from the current levels also there is a significant upside potential. Look at the 12-month target price, that's at around 866 rupees per share. So overall, from the analyst take, I'm going to give this a strong thumbs up as well. Let's do a revision of overall ratings, how things pan out for Sandhar Tech in KYC. The income statement is largely been very strong. Balance sheet and cash flows is neutral, but return ratios has been growing for the last 5 years for both ROE and ROCE. Street cred, stock has made money for medium term and short term investors as well as long term, and the valuations are still attractive even after the stock going up, especially which they are at the same levels of their 5-year average 12-month PE. And analyst take is of course going to be pretty strong. Almost 5 analysts are tracking this stock right now. Not so much of it, but a decent pick of these numbers, but all of them have a buy rating. So net the total KYC rating comes at roughly, you could say, almost 5.5 to 6 out of it. So that's the total KYC rating for Sandhar Tech. But to get in more perspective, we need to get about the speaker. What's happening with the speaker. We are having Jayant Davar, the chairman and MD and CEO at Sandhar Tech. He'll be talking with us. But remember, there are some interesting snippets about him I'd like to point about. He has over 4 decades of experience in the auto component sector. Second reason, or the second point, is he's the alumni of Harvard Business School. So of course the pedigree is very strong, and so is the company's pedigree with international clients. Also, I would like to point out he's having cred in ACMA, CI, and also a German entity as well. So strong presence all across, but the conversation continues with him, and of course he will be giving all his details, but just shortly after a break.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Welcome back to Know Your Company, and we are discussing about the entire story of Sandhar Tech and how things are changing. And now we are joined in by Jayant Davar. He's the Chairman and Managing Director and CEO at Sandhar Tech. Of course, good afternoon, sir. It's always a pleasure to have you with us. We are talking about the numbers, how things are panning out. But the Q1 numbers, there was a margin dip also. But overall, how the guidance looks and how was the quarter?
Well, let me go back to quarter one first of all and say that yes, the margins have dropped, and the margins dropped on account of a large amount of uncertainty that happened with the Middle East crisis. If you look at our numbers, a lot of that has been impacted by the energy costs themselves. So I think we as a company have been impacted by almost 7.5 crores, which was lost or which will be compensated, of course, going into the future by the OEMs. But in this quarter, we lost almost 7.5 crores from energy costs. There were new declarations on the minimum wages. And for that, our company just in Haryana, in the first quarter, we've been affected by almost 6 crores. If you look at our new investments, the new projects, there again, we where volumes have still to ramp up. Although the orders are there, but we are gradually ramping up. We have a 7.5 crore loss there. So if you look at that cumulative itself, that itself is about 21 odd crores that got sidelined on account of some of these challenges that we had to face in quarter one. Of course, we are very, very positive, and with the conversations on with our customers and the price lag that we typically get when we have to get compensated, we are confident that further down in the year, the losses of quarter one will get normalized, and we will get some compensation for quarter one in the balance quarters. So that's on quarter one. Going forward, and you asked me for guidance, while we don't really release guidance per se, all I have to say is that we've been growing, and we've been growing aggressively for the past several years now. We have made adequate investments to make sure that the highway that we have for growth is unencumbered, and we see no reason why the same pace of growth that we've had for several years doesn't continue into FY27 and FY28.
And Jayant sir, a lot of new projects are also coming in, and you're having JVs, with a lot of companies. What are the key timelines and, progress which is happening all on time?
Everything is as per schedule. You may or may not be aware that we are setting up the largest die casting facility in the country. In fact, in South Asia. This is a facility that goes online and in production by the third week of this month itself. In all, in the new projects that we have declared and invested money, we've invested close to 500 odd crores, out of which in the quarter one, we've only been able to generate a revenue of 148 odd crores. We need to understand that most of the projects that we employ money in typically give us an asset turn of something like 3.5 times. So we are quite confident that we will build up the revenues along the way, and this will give us the headway into the growth that we are talking about.
And Jayant sir, from mechanical locks to smart locks, how big this industry is, and the TAM, which is the total addressable market value, what does that come in?
Obviously, we've been waiting for it for the last 5 years. It hasn't been adopted by the industry on account of higher costs. But I'm glad to say that a small percentage of the two-wheelers have taken on. And last year was the first year when one of the OEMs went into mass production. In fact, two went into mass production. Our volumes in the last year were very small. We did something like maybe 70,000 odd smart locks. This year, we are looking at that number to go up by 250%, which means a shade less than 200,000. The adoption is growing, but not as rapidly as one would have liked to. Typically, this is on account of the high cost that is billed with the smart lock. Going forward, I think the prices of smart locks themselves, with the adoptability of this in a mass sense, will bring down the cost, and I think adoptability will go up.
And from, of course, the ICE segment, the internal combustion engine segment, let's remove that and let's focus on the EV segment also. How business is panning out on that side?
Yes, so we have a target of more than doubling our revenue this year from the EV segment, where we produce the chargers, we produce the converters, and we do the motor controller units. They've been well accepted in the market. The market is growing, but this is an area where we are still losing money as a company, although it's small. We are hopeful that by the next financial year, we should be able to break even and then make headway out of that.
Right, and Jayant sir, what will be the merger and acquisition opportunities coming in? Because in your industry, the way you are growing, there is a need of the hour for mergers and acquisitions also. Anything there inorganically you're looking at?
Yes, we as always keep looking at that. There are some which are active right now, but obviously in M&A scenarios, there is always a slip between the cup and the lip. So as and when we are ready to announce, we will. As soon as there is something to be signed on, we will keep the market informed.
Right, there's always a mystery whenever there's a merger and acquisition, but yes, if it's announced, we will be tracking that as well. But so what will be the key growth drivers for the company, and also give me the angle of the industry, also how things are panning out? A lot of tailwinds are there. If you could just point that out.
Well, if you were to look at three large verticals out of the others that we have, the three large verticals, which is casting, sheet metal, and the automotive group that you spoke about, are the ones which are growing very, very rapidly. Here, it's not just based on the growth of the entire sector. It is based on the transferability of business that we have got as substitution to other suppliers, perhaps for the OEMs. And our order books are full, in fact, more than full. So we are grappling with balancing out capacities, activating the ones which have been put at a faster rate than what we had projected. The industry itself, you're aware, is growing very, very rapidly. So at this times, I would say all guns are blazing.
Fair enough, all guns are blazing, but let's try to understand a little bit about the numbers also. There's a replacement capex, there are some capex plans for the future, and some are currently undergoing as well as we speak. So what are the capex plans earmarked? If you could just help us out with the breakup.
Well, it's difficult to put a pinpoint on every number in capex, but suffice to say that a large part of capex is behind us. However, you would realize that when we have 45 manufacturing plants, there is some maintenance capex that obviously happens. But as a target, we are saying that we would want to limit our capex on an ongoing basis to less than 5% of the revenue.
All right. Thanks a lot, Jayant sir, for giving us the views on both the company and the industry as a whole. And of course, it's expected that the margins normalize in the coming quarters as well. Pretty interesting. And of course, best of luck for the future. So, of course, we're talking about how overall the KYC numbers are looking. For these numbers, I would like to point out. And let's just get in the numbers first of all, because the KYC rating is something which I need to show you. First of all, the income statement that has been pretty strong. And just look at that. That's a good momentum coming in, especially over the last 3 years CAGR number. Balance sheet and cash flow, take it with a pinch of salt because there is some stress. That's why I've given this a neutral rating. But for the uninitiated, and if you are tuning in for the first time, the return ratios have been really strong. And over last 5 years, both ROC and ROE have done well as well. Shareholding, not much has changed. Street cred, if it's a 1 year, or you could say year-to-date basis, or even from the lows from March itself, there has been a significant upward. Last 5 years, decent returns of 130-140%. But of course, this stock has made money for a lot of people. Valuations, despite the up move, the valuations are still cheaper, and that 5-year, 12-month P number is something which I'm talking about. That is just at 16 times. Compare that with the 5-year average, that's also at 16 times, with the peak which was there, that had hit 25 times. So compare this company with the other auto ancillaries, it is still on the cheaper side. That's why we have given this a thumbs up. And analyst take, totally 5 analysts are tracking the stock. All of them have given a buy rating, not a single one is having a sell or a hold rating. The 12-month target price also is something on the higher side. So let's add everything. And the management commentary also, we just discussed that in our calculation, is 6.5 out of 8. That's the final rating for Sandhar Tech. Company has come for the first time in KYC and it's on the higher side of the averages which we generally give. So do note it down, and why we have got, that's the reason on the screen itself. So for interesting stories like this and many more in the auto ancillary space, or even the mid cap, small cap, or any other sector which you feel like, you can write it to us and we'll get those companies in KYC. For that, stay tuned to NDTV Profit, and yes, again, keep watching KYC.
पीओके के फायरिंग रेंज में खड़े हैं,
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise
and make smarter finance.
Some mood on Dalal Street as benchmarks failed to revive optimism. The Nifty trades near 24,300, while the broader markets have seen mixed moves, with Nifty Realty holding on the ground, but almost all key sectors trade under pressure. Astral gains in response to strong Q1 results. Stock sees the biggest single-day gain since April of 2021. Lenskart 2 soars on the back of a stellar Q1 performance. KRN Heat Exchangers also reports a strong quarter. Street gives them a thumbs up. Ultratech Cement slips on the back of a block deal, 25 lakh shares of almost 0.8% equity change hands, led by the promoter. Of course, the holder seeks roughly $200 million from this one. Pilani Investments, which is of course the promoter family, have sold by roughly around 0.57% stake. RBI proposes new interest rate guidelines to make loan pricing more transparent and standardized. The floating rate loans will see benchmark resets capped at 3 months, while existing loans must transition to the new framework by April of 2029. Public comments invited till the 11th of September. Good afternoon and welcome back to NDTV Profit. You're watching Markets at 12 with me, Puneet Zaveri. This is a show that gets you the key big updates for the day, the top buzzers, as well as what you should watch and keep on your radar for the rest of the day. But a quick check of how the markets are doing, because we've highlighted the fatigue that's clearly visible on the index, right? We're back again above that 24,400. So what we have actually seen just in the last hour or so, a revival yet again. It's a very similar picture that played out in the closing show and the closing one and a half hour of yesterday, where we slipped down to 24,300, broke that level too, but ended much higher given the last hour buying gash, essentially, if I can put it like that. Let's also look at the contributors for the Nifty 50 and see which one are those big names that are contributing today. Bharti Airtel, Eternal, as well as Shriram Finance is one, but you're seeing more of a broader breadth that continues to have a major impact here. ICICI Bank, Reliance, Hindalco now dragging the index, but also let's look at the Nifty 50 heat map also. We spoke about yesterday about the big movers that were dominating. SBI was definitely one of them that was in the top gainer. Today though, it has been led by buying scene yet again on Tata Motors PV. They come out with results today. It will be a crucial result to watch. Yesterday the stock was down on the back of what we had seen because of N. Chandra's resignation, as well as across the board the Tata stocks continue to be under pressure. TCS hasn't seen that buying too much today, up almost 0.7%. It's the 8th biggest gainer on the Nifty 50, but Shriram Finance and Tata Consumers are the other names buzzing on the Nifty 50. Also look at the sectoral heat map as well as the advance decline ratio very quickly. Not a particular trend that we are seeing yet again on the sectoral heat map front, but the advance decline ratio as well has been very crisscross. Yesterday, the declines continue to have a bigger impact compared to the advances. Today though, that has slightly reversed, but we've seen that level touch through once again. Also the mid cap, small cap will reflect this, but the individual movers is where the action is today. And let's pull up the BSE 500 too very quickly. The small caps up in the green, mid cap in the red. But you saw Apar Industries down 4.4%, but Astral we spoke about good results, and we'll discuss that more in the show. Gujarat Fluoro and Cyient, as well as Gujarat Gas on the back of results, are some of the other names. We now have Dhruv Joshi, research analyst at Mirae Asset Sher Khan, now joining in. Dhruv, very good afternoon. Thanks so much for joining in today. Let me first start off with, as we are wrapping up, almost just a couple of days left for the quarterly results to come through. I think there has been these individual pockets that have done very well. I think auto ancillaries are one where you're seeing the sectoral growth trend come through. But what have you picked up in terms of the bigger winners of Q1, and what is the preference essentially within those the bigger sectors basically?
Hi, thanks for having me. So what we're seeing at the moment across the board is that there has been great financial discipline across companies, across sectors. India Inc. has been primarily able to manage this macro concern pretty well compared to, I would say, global peers at the moment. At the moment where we see, overall positives, autos, auto ancillaries, some parts of the FMCGs, and along with that, also some metal names have performed pretty well compared to the entire industry. Top line growth is a given across, so 20% kind of a top line growth across companies, across industries. We've been observing that. Cost pressures, although, yeah, they do remain a concern, but they've been managed pretty well, and financial discipline has been the kind of a talk of the town at the moment. So, at the moment, when we come to demand and consumption, India continues to be resilient. Be it autos, be it FMCG, be it discretionary, everything continues to be pretty solid, pretty resilient at the moment.
Got it. Well, I just want to, and Dhruv, I'll come back to you because there are some important flashes on the bottom of your screen and just want to address that. Let's put those up on our screen as well. Tata Trust has actually gotten an email from N. Chandra on August 12th is what, the big important story and clarification coming through as well. He has conveyed his decision to not get reappointed as the chairman of Tata Trust. And those are the flashes that are coming in. Now, we've gone through with what was yesterday discussed in detail as well. But and this continues to be a very important developing story as well, because this has had an impact across what we've seen on the listed entities too. There has been a lot of debate of what could have led to N. Chandra not being reappointed and coming and essentially, choosing to essentially step down. But this is just in that we are picking up and we'll also get some of my colleagues to talk a little bit more on this. But definitely a big update that's come through on this, because Tata Trust essentially, if we will just wait for that update to come through, if that is accepted, but an important update nonetheless coming through on this particular one as well. But for now, the important flashes that we are getting is that they've gotten an email from N. Chandra on August 12th. This is Tata Trust, and that N. Chandra has conveyed his decision to not get reappointed as chairman of Tata Trust. So this continues to be a big breaking story that we are tracking here at this hour. You're not seeing too much of an impact as of now on stocks like Tata Steel. Let's look at TCS also. We pulled up Tata Motors PV, continues to be all of those important ones that got hammered actually yesterday in trade. TCS is just starting to see a dip downstairs, but we'll wait for some more update coming through. But these are important stories to track, because yesterday, as we went through the whole host of market guests that we had, all of them conveyed a very important point that he's been one of the bigger names, and it has been a sincere effort for Mr. Chandra to raise the bar at Tata Group. We've seen multiple key, the revenue growth also going from 6 to almost 16 lakh crores of the entities, the market cap overall at 22 lakh crores for all 25 to 26 companies under the Tata regime. But there have been some concerns, of course, either whether it's Air India or whether it's the digital ventures or the new acquisitions that the company has done, which haven't so worked out so yet. So all of these could have been potential reasons to not get reappointed yet again. But to make more sense of this, we'll also be joined by Alex very shortly to get some more perspective as well, because yesterday we did go through a whole host of guests, the letter that N. Chandra had sent across as well, not seeking his reappointment. So definitely these are big updates coming through as to what this could mean. They have mentioned that they will be looking to set up a selection committee as soon as possible, and that's coming in from Tata Trust. But definitely the first response coming through and big updates on this ongoing story as well. Now, so Doradji Trust respect Chandra's decision to not offer himself for reappointment. Those are the other flashes coming through, and that continues to be a very, very important update as well as we have seen ever since yesterday, because all of those stocks now come back into focus yet again today, and those are the big ones. But joined in now by Alex to get some more perspective of what this actually means. Alex, firstly, of this letter that Tata Trust has received now.
So, Puneet, I think you've summed it up, but let me go through it, right? So this is a letter that has come through, or rather it's a press release, I should say, not a letter, it's a press release that has come through just a short while back. And it is the first official response from Tata Trusts. It acknowledges that a letter was sent on the 12th of August, and that the nominee directors of the Tata Trusts have received an email from N. Chandrasekaran, the chairman of Tata Sons, wherein he conveyed his decision to not offer himself for reappointment as chairman upon the expiry of his current tenure, which is in February of 2027. The Sir Dorabji Tata Trust, which is meeting today, I believe, and we'll get details from my colleague Nimit, who is on the field right now, and he'll join us in just a bit to tell us what could potentially be on the agenda there beyond, of course, Mr. Chandrasekaran's decision. The Sir Dorabji Tata Trust, and I'm reading from the press release here, respects N. Chandra's decision not to offer himself for reappointment. I'm quoting exactly, "We place on record our deepest appreciation for his contribution and stewardship of Tata Sons and the Tata Group over the past decade. We thank him for his immense contribution during a period of significant change, growth and transformation across the group." The trustees of the Sir Dorabji Tata Trust have passed a resolution to initiate the setting up of a selection committee as soon as possible in accordance with the Articles of Association of Tata Sons for the purpose of recommending a person for appointment as the new chairman of the board of directors. We extend our full support to Tata Sons in ensuring a smooth, timely and orderly transition of leadership consistent with the values and long-term interests of Tata Sons and the Tata Group. All right, so that's the sum and substance of the press release that was sent out. We're joined now by Sriram Subramanian, who is founder and managing director of InGovern Research Services. Sriram, thanks so much for taking the time and for joining us on short notice. I hope that you heard what I just described from the press release, and nobody really would be surprised by the letter and the way that they have worded this. The fact is that a selection committee has been...
Yes,
good afternoon.
I think it was to be expected that the trusts would accept and the board of Tata Sons would also accept that N. Chandra's tenure of February 2027 will end, and that there wouldn't be any reappointment. I would think that the trust as well as the board now wants a candidate who is aligned to the vision of the trust as well. So N. Chandra, the only positive is that N. Chandra left on his own terms, or he is leaving on his own terms. Beyond that, I think now the onus is on the board to figure out a candidate who is aligned to the values of the trust.
Good. Also joined by H.P. Ranina, a corporate lawyer. And Mr. Ranina, we spoke yesterday when the decision came to light. It was not something that many people had anticipated. But your initial thoughts on the fact that a selection committee is going to be put in place, and this is something that they've voted on, the Sir Dorabji Tata Trust.
Yeah, good morning. What I told you was that this is a requirement of the Articles of Association of Tata Sons Limited, and therefore this is mandatory that they have to appoint a selection committee. Selection committee will now see who are the persons both in and outside India who are capable of running the entire Tata Group. You see, apart from being in line with the Tata Trust vision, we also need a competent man. The most important thing is the competence. The entire group is at stake. You just can't go by the fact that somebody sees eye to eye with another Tata trustee or not. The question is whether he's competent enough to lead the whole group, because the group is facing tremendous challenges in terms of huge losses which are made by certain companies, which are beyond his control. So we have to find a competent guy, and I hope that this selection committee will succeed in finding a competent guy who will be able to lead the Tata Trust, because we are concerned with thousands and millions of investors and stakeholders. And the Tata Group is a multinational group of India. So if anything goes wrong with the Tata Group, it will have an adverse effect on the Indian image and the Indian economy. So I hope they find the right person to lead the group and make sure that the group succeeds.
Indeed. Mr. Rania, I've got my colleague Nimit, who is on the ground and in fact who's aware of some of the developments that we're speaking about right now, as well as certain contexts which I'd love for you to comment on. So let me first go across to Nimit, who is at Bombay House right now. where the meeting has just concluded. The Sir Dorabji Trust has met, and I just told you about what they've done and the resolution therein. But Nimit, give us a little bit of context. This is not the only trust, of course, but this is the trust that has met. There is the second trust, which is the Sir Ratan Tata Trust, which has not been able to meet. So what is the context as you see it right now?
Yeah, so both these trusts together comprise the Tata Trust Group, and they control Tata Sons, and they have to together decide who will be the succession plan essentially after the stepping down of N. Chandrasekaran yesterday. So while the Sir Ratan Tata Trust cannot meet because of the restrictions placed by the Charity Commissioner earlier this year, the Charity Commissioner said that ongoing their investigation, no board meetings can take place for the Ratan Tata Trust. Now the Ratan Tata Trust has two options here. They can write to the Charity Commissioner, which I'm sure they will do, to lift this now that the succession planning needs to be done before the AGM on the 18th of August. But the second option, which was laid out in the Charity Commissioner's order itself, was that they can move the Bombay High Court against the order. So both options are now available to the Ratan Tata Trust, but as of now they cannot meet. The other trust here is the Sir Dorabji Tata Trust. Now the Sir Dorabji Tata Trust has of course met today, and their office is not here at Bombay House. It's at Cuff Parade, the One World Center, One Trade Center, I'm sure. And they've come out with a statement, firstly thanking Mr. Chandrasekaran for his tenure and everything he's done for the group. But more importantly, at this meeting, they have passed a resolution to initiate the setting up of a selection committee as soon as possible in accordance with the governing documents of the trust, for the purpose of recommending a person for appointment as the new chairman.
Because I'm joined by Mr. Suhail Seth, who's author and someone that you will recognize from his work in the film space as well as in marketing. Suhail, thanks so much for taking the time. The latest development, of course, is that a selection committee is set to be appointed. This is something that the Sir Dorabji Trust has voted on. What do you make of everything that's occurred from yesterday to today and the course that is likely to take, the impact that it has for the Tata Group?
So as I said to your colleague Vikram Oza last evening, I think it is perfectly seamless and as one would expect from the House of Tata. It's very clear that the trustees have placed on record their deepest appreciation of Chandra's work, his contribution, and the time at which he took over. So that's been parked. There's absolutely no acrimony. I mean, it's very, very seamless. It is what any respectable group would do, which has the cultural DNA that the House of Tata has. So I think we don't need to, be anguished about it, because it's also very clear in the statement that you've read out that the board of trustees, means the Tata trustees of the Dorab Tata Trust, have very clearly indicated that they will support and wish to have some level of alacrity in which the selection committee should be formed, which will choose Chandra's successor. And Chandra also has said that, till his tenure is over, he will look for mentoring or look towards mentoring a successor. So I think it's all fine. I mean, there's no interpretative layering that you need to, glean over. I think it's very clear, it's in simple English, and it's plain. It's very respectful, very graceful, and tells you exactly how the House of Tata works.
This decision will be made with that kind of alacrity, though, and you anticipate that.
Well, I hope.
Yeah.
I hope.
As soon as the 18th, Suhail? As soon as the 18th, you think, or you think it'll take longer than that?
I don't think the decision of the successor will be made on the 18th, and neither does the statement say that. The statement says on August the 18th, the AGM is supposed to be held if it isn't deferred. And on August 18th, perhaps what might happen is the selection committee's contours may be known. But to have a successor between today, which is the 13th of August, and the 18th of August, I doubt if that's going to happen. In the sense, you're not going to name Chandra's successor on August the 18th. What has happened very clearly is that Noel Tata and the other trustees of the Tata Trust have put in motion the process of continuity, which will therefore guarantee stability. That has happened, and that is very clear from the statement. It's a respectful and respectable statement, a statement which parks the gratitude that the trustees have expressed towards Chandra. And I think everyone needs to move on in the spirit, in the manner in which the House of Tata is run and governed.
Last point, which is that in the past we've seen that Ratan Tata has taken over as an interim chairman while ensuring that continuity was maintained. Do you anticipate that Noel might do the same in the absence of a chair?
So. No. I'm not privy to Noel's conscience, but I don't think Noel has ever suggested that or even wants it. I was there on October 24, 2016, and at that point in time, I mean, I wasn't in the meeting, obviously, but I was there. And I remember it was the Tata Sons board which weighed down on Mr. Tata, on Ratan Tata, and said that you have to step in. And I still remember Mr. Tata saying, I will, but only for a period of 6 months. Because even he realized that 6 months to 12 months is an adequate time to find a successor. And when he stepped in on October 24, 2016, you remember by January, they had made the announcement that Chandra would take over, and Chandra took over in February. So, even the 6-month period was curtailed because Mr. Tata did not want the executive responsibility. That was forced upon him, and he took it because he wanted to ensure stability and continuity. And you've seen the result. They had Chandra. Chandra's had a decade. So, this house of Tata is run differently. Its DNA is different. And I don't foresee any issues whatsoever at all.
And so just in conclusion, Suhail, there is the very real possibility that Chandra continues till the end of his term, and there's an easy glide path for someone new to come through and a mentorship to happen or a handover to happen. And as you say, this will be seamless.
Yeah.
Okay. Suhail, thanks so much for taking the time. Pleasure speaking with you.
Thank you so much.
Mr. Ranina, just your view on the point that was raised by my colleague, and that had to do with the meeting of the Sir Ratan Tata Trust, which is one of the two trusts that will ultimately weigh in on the decision. There is a legal aspect to this, and the possibility that they will have to approach the Bombay High Court. What is your opinion?
No, he's right. Either you appeal to the Charity Commissioner and ask him to give permission to hold a meeting, or if he refuses, then go to the Bombay High Court on a writ petition and ask the Bombay High Court to issue a writ of mandamus allowing the trust to have a meeting, because this is an essential item. So they can have a meeting just for this one item. I'm sure even the Charity Commissioner will agree. There should be no difficulty. Absolutely no difficulty.
And
they have to move. They have to move in the matter immediately.
They have to move in the matter immediately. Yes, it's a matter that it needs to be resolved quickly. Just a quick follow up to that, just so that everyone understands, Mr. Ranina, how this will follow through. The Sir Dorabji Trust has voted on this, and they have said that a selection committee will be formulated. If effectively, the second trust will also have to do that. And so therefore what you're saying is that there will likely have to be a writ petition for that to take place. Once that happens, what happens?
Well, it will happen, and they have to move. I'm sure the Bombay High Court will agree immediately. I don't see any difficulty in this, because this is in the interest of the group. So nobody can have any excuse for not holding the meeting. So that they will go ahead, but they have to act in the matter. They have to move the High Court today itself in the afternoon and see what if they listed tomorrow. Matter is listed tomorrow, then the matter will be decided on the spot. I don't see any difficulty.
I have a couple more questions about the process. My colleague Shrimi is joining in. She's bureau chief in New Delhi. Mr. Ranina, do stay with us for a few minutes more. Shrimi, what are you picking up? You're hearing something from your sources.
Yeah, completely. So, as we all know, the two important, trustees here, the Dorabji Tata, Sir Dorabji Tata and the Ratan Tata, both are the majority shareholder in Tata Sons, and both, representation in the upcoming AGM is equally important, and that is why the entire, the story which is there first, of course, that the Ratan Tata trustee has reached out to Mumbai Charity Commissioner, seeking some sort of immediate relief or at least the interim relief. And that is, they are trying to sort of secure that note from the charity commissioner. Whether that will happen or not, we need to see it. Since till August 12th, there was no word from the Mumbai charity commissioner. So that's one. So they perhaps exploring to move to court as well. And perhaps like all the experts saying that it's very important and crucial for both the representation to be part of AGM, they may perhaps get that, restraint order lifted. So that's one. Another point is that in today's meeting, what we are picking up, that beside the selection panel, which of course putting and everything set the motion for the succession planning, they're also kind of nominated one representative from the Rabji Tata, who will represent in the AGM on August 18th. Same from the Ratan Tata, but for Ratan Tata, they kept it ready because they can't do anything until they get the order in favor. And then accordingly, both the representative will attend the AGM. Now, apart from the succession planning, because that's of course the center of the entire thing, they're also looking at all the dividends, the amount, the accounting, and everything to be cleared in the AGM, and that is why it's important for both the trustee to be the part of AGM. So that's what we are learning so far, Alex.
Important updates that you're picking up. Thanks, Shrimi, for that. Mr. Ranina, what I would love to hear from you is your understanding of how this process will take place from this point on, assuming that everything follows due course, right? So the first thing, of course, as you pointed out, you've already explained why it's important for the Ratan Tata Trust to get that writ from the Bombay High Court. What happens from this point on to the selection of a new chairman?
So what will happen is that they will get an order to allow one of the representatives to attend the meeting on the 18th of August at the AGM. Then, according to the articles, it is mandatory to have a selection committee. So selection committee will be there, will be appointed. Then the third step would be to select the people, because selection committee, we do not know whether they're actually found out the members of the committee who will be on the selection committee. That will have to be decided. I'm told that according to the articles that there should be some 2 from the trust and 2 from both the trusts each and 1 from Tata Sons board. So they will be on the selection committee. And then the selection committee will take its own agenda, have its own agenda to invite people to see who is most suitable to lead the group. That should take about a couple of months. I don't think it can be done immediately. It may take 2 to 3 months. They will have to be interviewed. Those persons selected will have to agree to be appointed. If they agree to be appointed, then are they free to join the Tata Sons as CEO? All that will have to be decided. So it will take another 2 to 3 months for that new person to join. And after that new person joins, he will have to be briefed by Chandra, because the new man who takes charge cannot simply just walk in and start running the group. Sure. He will have to be briefed. He will have to go through all the issues involved. Yeah. So I think Chandra may be asked to continue even after February for a couple of months.
Interesting.
In order to brief the new incumbent.
Interesting.
So that he takes charge in an effective manner.
Very well.
It's going to be a 6 to 8 month process.
Very well described, Mr. Ranina, and appreciate your time, and indeed Shriram's time as well. Thank you so much for taking the time this afternoon. Shrimi as well, thank you so much for joining in, and everybody who participated in this. I think you held fort very well, Puneet, and it's an interesting development. Yeah. But there's lots to talk about, of course, over the course of this afternoon. We'll be talking about markets next, so stay tuned for that. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
POK के फायरिंग रेंज में खड़े हैं।
Just few inches away is POK.
हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं। Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 a.m. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
First move sets the day, and in markets, being early is the edge. The edge begins the night before.
Before India wakes up, the newsroom is already buzzing because the market rewards those who are prepared.
That's where we come in, tracking momentum and where the markets could move next.
Hello and welcome to Trending Stocks with me, Sharad Dubey, and joining in shortly will be Hiral as well. But looking at the markets, initially we had seen a gap down opening coming in, but now the volatility comes back, a sharp recovery coming in. Let's just get in the Nifty chart to show you how things have panned out. Initially a gap down opening, then you could see a long period of consolidation, but the moves in the last 15 to 20 minutes, we're seeing a good recovery coming in for Nifty. Let's see what Nifty Bank has in store for us. Of course, it's a lackluster day of trade as well, but no major recovery is happening for Nifty Bank. But nevertheless, the chart setup looks like there is a volatility at play. Let's pull out the Nifty Small Cap Index also to show you what are the stocks which should be on your radar, where the momentum is still strong. It is still in the green, a good strength coming in. So a little bit of value buying is definitely happening on the charts. Also, apart from this, let's look at the key sectors where the actions are happening. Let's pull in the sectoral indices also, where we see the most amount of momentum is coming in. Especially look at the realty space, little bit of buying is coming in, but most of them are in a range. A little bit of sell-off has intensified in the metals, commodities and the oil and gas. Also, let's pull out the advanced decline ratio to show you how things are moving in the broader scheme of the things. It's largely even Stevens, but almost 3:2 ratio in the favors of bulls. So that means there is a good strength overall coming in the markets as well. Now speaking of that, of course, Q1 numbers we are at the fag end of it, and we'll be tracking a lot of important earnings as well. But just moving on, we are with our guests also right now, and we'll be talking about the technicals for both Nifty and Nifty Bank. And Rupesh Solanki will be joining us. Rupesh, hi, good afternoon. Always a pleasure to have you. Seems like a little bit of Nifty and Nifty Bank. I just wanted to get your view before we start the rapid fire round on the recovery in the markets. Do you think this will sustain?
Yeah, definitely. It seems the pullback will sustain as you have spoken. The index today took support around its 20 DMA, which is around 24,300 for the second consecutive day. This is a very good support. So I do have a view that as long as the Nifty sustains above its 20 DMA, that's about 24,300 on a closing basis, then we have a possibility that we may restart the new upswing and may test around 24,600 in the coming next few sessions.
Rupesh, let's start our rapid fire round. First stock is Sarda Energy. Your views on it and which technical level should we be tracking?
Yeah, Sarda Energy, we are seeing a good momentum today. Almost 1.50 crore shares are already traded, and a strong bullish candle is in the formation. Technically, the stock has formed a double bottom around 490 and has just started a new upswing. So I do expect in the short to medium term around 600 levels, and we must keep a stop loss of around 490 for the entire position.
And Rupesh, the next stocks, Black Box, of course, corporate developments coming in. Is there any trade to be made here in this counter?
Yeah, definitely there is a trade to be made. In yesterday's session, the stock had formed a good bullish reversal around the swing support of 720 and has started a new upswing. Definitely one can enter long positions around current levels, keeping a positional stop loss of around 730, and I expect targets of around 960 to 1000 in the medium term.
And Rupesh, if you can get the charts of Astral, very strong set of numbers and one of the best performance, if you compare that with the peers as well, a good time to take a little bit of profit off the table from this counter?
I don't think so. Looking at the derivatives data, yesterday we have seen a very huge long build-up on the counter, and as of now the stock has formed a strong bullish candle, and it's just testing the 61.80% retracement of the entire fall from 1,760 to 1,320. There may be some intraday profit booking possible, but I have a bullish view on the counter, and one should stay invested in the Astral for a more medium to long term perspective.
Stay invested in Astral, that's the call coming in. But of course, apart from Astral also, let's talk about the next stock which would be in focus. That is NetWeb Tech. I want to get that stock as well on the screen. Is there any trade to be made here?
Yeah, definitely. NetWeb is one of the outperforming stocks in the IT space, and as we speak, the stock is just 100 points away from the all-time high of 5,230. The stock is in a good momentum, and I would advise to stay invested in the stock, and do expect a new all-time high in the next 1 to 2 trading sessions.
Right, and the next stock is Thyrocare. I wanted to get your views on it. Of course, the volumes are also moving, but is there a trade to be made here, Rupesh?
Yeah, technically, Thyrocare seems that today we are seeing a day of profit booking, and as we speak, technically it is forming a bearish engulfing pattern, which indicates a profit booking at higher levels. We can buy the stock a bit after some correction, maybe around 570 would be a good level to watch out.
Right, and Rajesh, your views on Godavari Power?
Godavari Power, technically speaking, it's an intermediate downtrend, continuously falling from the high of around 315, and as we speak, the stock is trading around 240. It is falling within a descending channel pattern. As of now, there is no trade in the counter.
Right, so that's the end of the rapid fire round. But over to you, Hiral.
Okay, thank you so much for that. In fact, let's move to the management of IndiGrid, which has seen an interesting set of numbers. If you talk about the operational revenue, 18 to 19% is the kind of growth, 23% growth in terms of EBITDA, and they've maintained their FY27 DPU guidance of almost 16.48. Now, the NDCF reserves, they have dipped this quarter for distribution. However, they've also won. The grid that they've won has lifted acquisition pipeline as well. To talk to us, Meghna Pandit, CFO at IndiGrid, joins us. Meghna, welcome to the show. Always a pleasure to speak to you. Overall, if you have to look at the quarter gone by, operational revenues, EBITDA, DPU guidance seems to be okay, and you've won 2 new transmission projects involving almost a 5,800 crore capex through EnerGrid. What does this actually tell you in terms of FY27 as a year?
Sure. I think first quarter has been again seeing strong financial performance, which is showcased in the numbers and the growth on revenue as well as EBITDA, basis which the guidance for DPU, distribution per unit for the quarter of 4.12 continues. EnerGrid is actually the development company which we formed along with BII and Norfund, and it's EnerGrid which has won 2 projects on the transmission side with a cumulative capex of around 5,800 odd crores. For IndiGrid, what it basically means is the pipeline of projects which we will be acquiring from EnerGrid. It has now gone up to a cumulative number of about 13,500 crores, which means it's a good pipeline of identified projects that IndiGrid will be acquiring over the next couple of years. For FY27 particularly, we will look to acquire at least 2,000 crore of assets from EnerGrid as and when they become operational during this year. So that again bodes well from a growth standpoint for IndiGrid.
We're running short of time, so I'm just going to take one more question with you. Renewable energy and BESS opportunity, how big is that going to become? And what kind of returns can investors actually expect from BESS projects as compared with the traditional transmission assets?
Well, renewable and BESS, they go very hand in hand in terms of the growth opportunity. It is a humongous opportunity considering the kind of peak demand that we have witnessed in this quarter, 270 gigawatt of peak demand that we saw. On the BESS side, there is a requirement of 80 gigawatts of storage capacity that needs to come up by FY 35-36, which bodes really well. And looking at the intermittency of power from renewable generation, storage is the one which will address it. Similarly, from a return standpoint, I would say that battery energy projects, standalone battery energy projects, contracts are very, very similar to transmission projects, where we get paid on an annuity basis. And fixed tariff projects for a contract life of about 12 to 15 years. So from a return standpoint, once the projects become operational, I would say more or less in line with what transmission projects deliver on the returns front.
It will be interesting as we speak. Stock not doing too much, but thank you, Meghna, for joining in. It's always a pleasure to speak to you. Let's quickly just address the flashes at the bottom of your screens in terms of anti-dumping duty, which has come in. Now, China has added Sterlite Technologies to the anti-dumping list, is what we're picking up so far. Let's see what the other lines that are coming in. The US government is extending ADD on R32 imports from China as well. Apart from that, they continue the anti-dumping duty on India optical fibers. Let's pull up the counters on the screens. If you can just have a Sterlite Technologies and see what the counter is doing in trade, because the company has been added to their anti-dumping list. If you can just have an intraday chart of Sterlite Technologies, no major movement, that mild dip coming in, but the stock continues to trade in the positive. But Sharad, over to you to talk about what next are we looking at.
This is, of course, a very important development coming in. It's expected to be a bit positive, and we are joined in by Varsha to actually understand what is this anti-dumping duty and whom does it actually benefit.
It's about R32 gas, which are used in your ACs. Now, this is positive for SRF and Navin Fluorine. Now, what's the news? The news is that the US has continued, anti-dumping duties on R32 gas, which has been imported from China. Now, why? Because US believes that the Chinese companies, were selling this gas in US at a very cheap prices, and if those extra duties are removed, then the Chinese import could become very cheap again, and the US manufacturing could lose business, and US could suffer losses. Now overall, so overall, this is positive for SRF and Navin Fluorine. Why do I say that? Because they have huge capacity and they are also expanding their capacities. And we have recently seen these companies giving good set of numbers also. And everyone is bullish when it comes to R32 gas because everyone is putting up the capacity. So hence, if anti-dumping is being extended for China, Indian companies will have a benefit when it comes to SRF and Navin Fluorine.
Thanks a lot, Varsha, for that. Rupesh, a quick view for SRF, Navin Fluorine, which we are discussing. Varsha just mentioned. Anything on the technicals?
Yeah, definitely. Navin Fluorine looks better than SRF. As you can see, the stock is in a steady uptrend, Navin Fluorine, and last week the stock had registered a new all-time high, which was around 8,730, and we have seen a decent correction. And the stock is also holding the last week's bullish gap around 7,800. So this is really a very good trending stock, and I would advise to stay invested in the current stock, keeping a stop loss of around 7,700, and we may yet again see a new all-time high soon.
Okay. Thank you so much for joining in, and always a pleasure to speak to you as well. So that's the view coming in on individual stocks. But SKF India, an interesting quarter that we're looking at over here as well, because this is the first full quarter post the demerger. Stocks seeing gains of nearly 4%. Let's get in the management to talk to us about this as well. We have with us Mayank Holani, CFO at SKF India. Mayank, welcome to the show, and always a pleasure to speak to you. Help us understand, overall, this is the first full quarter, if I'm not mistaken, reflecting the new structure post the demerger. So if someone has to now assess the standalone automotive focused business, what is that trajectory going to look like if you have to take cues from here with regards to FY27 as a whole?
Hi, good afternoon. Pleasure talking to you. See, this is not the first quarter post demerger was October to December 2025, right? But yeah, this is the first full financial year post demerger. And we have seen a good growth in revenue of about 27% increase in revenue from operations versus previous year. While if you look at quarter on quarter, it's almost flat from last quarter, because obviously that was a very high growth number. And EBITDA also sees a recovery from the previous quarter, which was again impacted by the demerger related items, which are one-off costs. So that EBITDA comes to a normal level now, I would say. And if you compare it with the previous year, it's like marginally higher than the previous year same quarter when we compare only the standalone numbers, but it's in the normal shape. And revenue, obviously, for the automotive standalone business, we are at about 27% growth versus previous year.
Okay, you've indicated a near-term PBT margin of target of around 11 to 12%. How quickly can you achieve that? And is that number going to be sustainable going ahead?
So see, we are, if you look at the quarter, we are at 14% PBT, 14.3%, which is close to 60 basis points higher than the previous year, while EBITDA is about 17.1%. So we expect this level of margin and profit to sustain for the year as well.
If you have to look at 3 years from now, will SKF be known as a bearings company or increasingly as a technology and mobility solutions company? Where are you moving towards now?
Yeah, I think our focus is on moving towards more technological advancement and bringing new products to the market. And also in case of our distribution business, we look at providing more solutions to the industry instead of just plain bearings. And we draw a lot of strength from the group's cutting edge technology and the R&D facilities, which help us bring new products, and working alongside our OEM customers to bring solutions for their new requirements. As you see, automotive market keeps on evolving and new vehicles, new products keep coming. So we also keep working along with our customers to bring products suitable for their new vehicles and new items.
Right, Mayank. This is Sharad here. I just wanted to understand the capex amounts, which you have allocated. Will there be a replacement capex also, and what could be the numbers in the coming years?
The capex which we announced a couple of quarters back was about 500 crores over till year 2028, and we are on track on that. And that capex is primarily going towards adding new capacity across our three plants, Haridwar, Bangalore, and Pune. We are adding new production lines, which already this year also we will be investing close to 200 crores in capex in the current fiscal, which is primarily going towards increasing the capacity. And by probably by 2028 fiscal, we will have the capacity, the current capex cycle completed.
Okay, lots to watch out for. Thank you, Mayank, for joining in. Always a pleasure to speak to you. The stock up seeing gains of nearly 4% as we speak. But moving on to the cement and the metal pack. Now, the Parliament has passed the MMDR Amendment Bill 2026 with an aim to boost the critical mineral exploration and development across India. And a lot of developments that are happening in these two sectors. Who better than Rakesh Arora, founder at Go India Stocks, to talk about this. Rakesh, good afternoon and welcome to the show. It's always a pleasure to speak to you. My question coming to you over here is, we're talking about the MMDR bill. Now, if you have to look at the impact, the way we've looked at it is, there will be an impact in terms of cement companies, there will be an impact in terms of metal companies as well. If you could just lay down the foundation for us in terms of how big an impact this could be and how do you see it translating moving ahead?
Okay, so thank you for having me on the show. There is a little bit of ambiguity that state government have right to tax anything which is connected to land. And since mining is also connected to land, there was a little bit of an extension. So this new amendment is supposed to clarify and put a limit to what the state governments can charge. Now, the numbers are very huge. The numbers were from retrospective 2005 onwards. And the absolute amount which the states would have gained would be between 1 to 2 lakh crore. So a huge number. So this is a big relief for the companies. But nobody was expecting that it will come through. So not a direct impact on the stock prices, but obviously an overhang is removed. Now, what kind of benefit these companies will have in future will depend on what kind of limits the central government sets up. So currently, state governments are charging a little bit. If the central government sets a limit which is higher than that or around that, maybe there may not be too much of gain. But what it does is it does remove all the uncertainty, and that is kind of welcome. So as you rightly mentioned, the companies which benefit would be like NMDC or the cement companies or Coal India. All these guys were on old royalty regime, and they were seeing a sharp increase. So these are the companies which would benefit out of it.
This reform ultimately will be margin accretive for cement companies, or do you think that the benefits that everyone is talking about are overstated by the market right now?
So as I mentioned, it's difficult to quantify till we know what the central government actually puts the limit at. So central government is just reserving its right to put the limit. There are no limits in this act. They have to be notified separately.
And would you expect, say, in terms of value chain, which are the metal value chains that will gain? Will it be iron ore, coal, aluminium, zinc, or copper, if you have to give it in chronology?
So iron ore is, one of the most talked about. So definitely iron ore is the top of the peg. Coal is another one because Coal India was, paying a little bit of per ton basis, but it was getting passed on to, I think the power companies and eventually to consumers. So, that value chain would benefit the power companies and the state electricity boards and all that if that comes down. Coming to other metal or cement, the value is not that much as a percentage to the finished product. So it doesn't really matter, as much as it would for, say, coal or anode.
Okay, so that's with regards to the MMDR bill. Rakesh, the other thing is with regards to Aditya Birla Group's decision to go ahead and charge brand royalty across group companies. How significant do you think is a step like this, and what is the kind of impact that you're looking at?
So currently the number being talked about is small, but this is unnecessary, distraction for investors. We also need to know what kind of value they're getting from this royalty payment. So, but this is an international trend. International companies charge, and now the Indian companies are also waking up to it. Vedanta is already doing that. So it's a common trend. But let's hope that the number remains small. Till time it is small, I think people might ignore it. But if they try to increase it next time, there would be sharp derating for these companies.
Okay, so help me understand on this now. How should investors look at it? One, is the value shifting from the listed entities to the promoter holding company, or as a legitimate payment for brand equity? That's one aspect of it. And two, you're talking about a royalty, as you mentioned, which is a very small number of revenue, and it's capped in some cases as well. So is the concern going to be about principal than the absolute cost?
Yeah, so meaning if it is fair, I mean, obviously, these group companies gain from their parent. Meaning, if you take the name of Birla or Tata, obviously they have a brand value, and these companies benefit out of that. So there's a little bit of payment is probably justifiable, and so that 0.25% that they're talking about seems okay. But if the intention is to, shift the value, that is where, investors will have a problem. So at the moment, I don't think that seems to be the intention. And so it's kind of a non-event, I would say. But we have to wait and see in the next few years how things pan out.
My last question to you is in terms of, Rakesh, what's happening in the metals and the cement space. Now, cement, everyone's watching out for what are the kind of price hikes that could come in, when, and whether the markets will be able to absorb it, and what that FY27 will look like. And likewise, metals have seen a good run as well. What would you advise investors to do in both these segments?
So cement sector has been out of favor for some time, and because we had two giants who were fighting it out for market share, and Ultratech, is saying that the main rival Adani is not able to really get its act together, and they are pushing for market share gains, and that's why the price rise is not sticking. There was some price hikes taken, the previous quarter, but that was largely to offset the sharp increase in cost, both petcoke and diesel prices. And we are currently into lean season, so probably September, October would be the time to reevaluate. How the things are shipping out. Normally, cement stocks bottom out around October, November, before the busy season. But as I said, till the time Ultratech is looking to gain market share, we'll have to, see that EBITDA per ton is stuck at the levels which has been for last 3-4 years now, and that is what is holding back the re-rating of these companies.
Okay.
Coming to metal stocks, it's playing as per the book that we thought. Metal prices went up quite sharply. They have corrected, around between 15 to 20%. Now we're seeing a tactical rally. Nothing much here. It's unlikely that they'll go to their previous highs back. So investors who are stuck in these stock, probably should look at these relief rallies which are coming because of good results and a small rebound in commodity prices to exit. Probably wait for better entry points. Steel looks slightly better than base metals. Aluminum, I'll wait for $2,600 aluminum price to really get into.
Interesting, so that, thank you, Rakesh, so much for joining in. I mean, a whole host of things that we've discussed and good clarity coming in there as well. So that's Rakesh Arora talking to us about the MMDR bill and what's happening in the metal and the cement space. But moving on, Work hard is in focus as well. In fact, a sharp turnaround is what the company has delivered in the first quarter. The stock has cooled off from the day's highs, but still trading in the positive 2.5% up move is what we are seeing. If you talk about the revenue, a 26% growth, EBITDA has actually jumped 2.6 times on a year-on-year basis. So strong numbers there. Joining us, Habil Khorakiwala, founder and chairman at Walkard. Welcome to the show, Mr. Khorakiwala. Always a pleasure to speak to you. A 26% revenue growth, good EBITDA growth as well, and good amount of margin expansion. What have been the key drivers behind this sharp operating leverage, and what is that medium-term outlook looking like?
See, our performance both on top line and operating results and bottom line has been consistently good in last several quarters, and that is being continued. The major reason is that we have overall top line growth of about 26%, and our EBITDA, which was negative last year, is in a positive space this year at 107 crore rupees. Yes.
Okay, so that's overall growth. And what about the biotech revenue? That has more than doubled. Now, how much of this growth has come in from insulin, and how sustainable is this momentum going to be, Dr. Khorakiwala?
The major part of revenue, as you would have noticed, has come on from our international business. And that is being the important focus area for future growth. And that higher level of growth will continue during the year.
Okay. You've also in the past spoken about opportunities in biologics and new molecules. So how should one actually think about the revenue ramp up, the capex that will be required, and the growth trajectory over the next 12 to 18 months?
Our other normal business will continue to grow at least 20% plus over the next 12, 18 months. And our new molecule like Zenix would be additional one as far as the revenue is concerned. And as far as because there is an initial investment in creating organization. So we would be either at a break-even point or little plus or minus.
Okay, so the next question that I have for you, Mr. Khorakiwala, is that all of this will start to play out now. When do you see normalization? And there is going to be a point in time where you will see that hockey stick kind of growth coming in. Will it be 28? Will it be 29? Which years will we see that?
Definitely 28, FY 28 would see a very beginning of a rapid growth. At 29 onwards, you will see our growth like a hockey stick.
Okay. With regards to the R&D spends as well, they've been relatively controlled. But now, with the pipeline that you have, which is advancing towards commercialization, will those spends actually increase?
I think our R&D spend would remain at 10 to 12% of our revenue for next 3 to 5 years, because we intend to take these products which we have now introduced in India, that is MROC and MICNEF, over a period of time as a global clinical trial and go in the Western market. Similarly, our 6777, which is a unique once-a-day antibiotic, will be entering phase 2 clinical trial and phase 3. So the next 4 years, 5 years, we have R&D expenses, which will remain more or less based on the top line. So it will increase.
Okay. And what is the kind of impact it will have in terms of margins? Because if your R&D spends are going to increase, margins and bottom line to some extent will be impacted.
I must tell you that our margin will continue to improve year on year, and it will improve significantly once after FY29.
Okay, let's also talk about Zenix in the US and in India. What are the timelines in terms of commercial launch? And you will enter US with this one. You also have Audrate and Foviscu that will follow at some point in time. So how does the strategy take care, of you going to work on all the drugs simultaneously? And second part is, in terms of the peak revenue target that you have, you've said $1.5 to $2 billion of Zenic. What is the expected timeline to achieve this peak?
When we talk of a peak sale, it always means during the life of patent. So it is quite possible that we reach this peak sale little earlier also. But definitely during the life of patent, that would be our peak sale. As far as Zenic is concerned, we might do better actually, the feeling and perception as we are getting. But I think we stay with those numbers. And the other molecules we will be introducing over a period of years actually. And at a given point in time, we cannot introduce too many products because the new molecule, I have the same customer group by and large. So and there's a lot of medical and scientific communication requires for them to understand a new molecule. So we need a reasonable gap between the molecules, and that is how we are monitoring our research program, so that based on the potential and the priorities from the business point of view and scientific point of view, we will go introducing various other products over a period of time.
Okay, that's going to be interesting. My last question, the Antibiotic Academy, what is the strategy there? Because, the scientific education platform, now how will this directly convert into commercial adoption and hospital formulary listings for Zenic in India? I mean, what's the strategy there?
See, yesterday we had our first session of WOCAT Antibiotic Academy. And we had some of the leading doctors from India who participated in a panel discussion. And also they shared various case studies that were actually had during our compassionate use. And we had more than 1,000 participants yesterday. And that was our first meeting. And our fundamental objective is that we want to create a position in the doctor's mind and in the society how to use the antibiotic in the right way, for the right patient, in the right conditions, and at the right time. So I think the new sciences are emerging in management, scientific management of anti-infective drugs. And our idea is purely academic to do that. But the benefit we get, or the country will get over the years, because this is an initiative we want to extend on a global basis over a period of time, is we create a presence of India worldwide as a more scientific and academic organization. So I think it benefits in the background, not directly to a specific product A, B, or C. That is, our business organization will take care. So we will keep the focus of this academy, scientific and medical primarily, and sharing of experiences with the doctors. So it is really a dialogue amongst them and between the different part of the science who's involved in finding a new drug or using the new drug. So that is what the academy is trying to achieve. And that is where we create a position of acceptance, credibility, not only in India, which we have, but on a global basis. And India is the first thing where we are trying to fine-tune the model.
Okay, so lots to watch out for on this front as well. But Dr. Korakiwala, thank you so much for joining in. Always a pleasure to speak to you and get insights. The stock at the day's highest levels as we speak, seeing gains of nearly 3% in trade. But we'll quickly slip into a short break. On the other side, we'll be right back with lunchtime trades from the NDTV Profit studio. Please stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
लंबी कैसे टाइगर कैसे।
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold, buy, sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on
Hello and welcome. You are watching Lunchtime Trades, the show that gets you a roundup of everything that is happening in the world of commodities, news and updates, and of course on the top buzzers at this hour, all while you grab your lunch. But now let's take a quick look at the markets. What's happening here? There was a bound of recovery for both Nifty and a little bit of Nifty Bank. But it seems like those gains are coming off. So there is volatility at play. Let's just get in your top gainers also in the Nifty. What's happening in the entire picture? Of course, a little bit of volatility is there for your benchmark indices, but largely we see the momentum is there, especially in the Tata Group stocks. That's where the buying is happening. Select IT is also there, but what's not working are the banking names, of especially ICICI Bank. There's a drag coming in from Hindalco as well, but it sounds even Stevens right now, and there's no clear trend as such. And remember, today is Sensex expiry also. Let's just look at the sectors also, what's happening, and most of the sectors are technically in a normal range right now. Nothing much to look at. Of course, the defense FMCG buying is there, but the sell-off has definitely intensified when we talk about the metal pack. But speaking of metals and commodities, we are joined in by Pranav Mer. He's the Senior Vice President of Commodity and Currency Research at JM Financial Services. Good afternoon, Pranav. It's always a pleasure to have you with us at NDTV Profit, and I'd like to talk especially on gold. Now, that has started to ease after hitting more than almost 2-month high levels. But yesterday was an important event, softer US inflation data coming in. How do you see this actually pointing out? And of course, the July CPI data is of something I'm talking about. Pranav.
Yeah, good afternoon. Hi. The data was mostly in line with expectations. We were expecting the inflation to ease out around 3.4 to 3.5% on a year-on-year basis, while the core inflation could inch further lower since the oil prices had already taken a bit of a correction from after hitting from around 102. It had come down close to 75. So the data was mostly in line with expectations. So what this data has done with it, and that it has not trimmed down the expectation that the Fed could go in for a rate hike when they meet in the month of September. So the probability is just around 42%, and that is what we've seen supportive to the gold and silver prices. But definitely, we have already seen a good recovery in gold prices from around $4,000. Prices have risen close to $4,400. So a little bit of the data was also priced in, but some profit taking we have seen coming in into yesterday's session. Today's session also prices are trading slightly lower. However, the trajectory for gold is likely to remain a little bit on the positive side that we see in the coming sessions. We may see prices scaling up close to 4,500 and towards 4,600 levels as well, but we don't expect prices to go beyond that, since we have the festive season also as well upcoming in the domestic markets. So that should give some support to the gold prices. The ETF investors have been adding long positions over the past 3 weeks. So this is giving some additional boost to the up move into the gold prices. However, if somebody is looking to go long, I feel we should wait for a correction of at least 3 to 4% before starting to go long in gold again. And possibly the support that we see in gold around 4,000 to 3,950 levels on the downside, which is in the dollar terms.
Exactly, and of course the global and the domestic, there might be a little bit of aberrations also because of the demand which comes in during the festive season for India as well. But moving on our conversation, there was a major oil spill, that has spread across Oman's coastline tanker, which was carrying roughly 800,000 barrels of Russian crude. This spill is of course going to be an issue in the marine life, but along with that, fresh vessel attacks have also started coming in. We had thought that these attacks would come down, but this has maintained over the last, say, 10 trading sessions. How do you see this, Pranav, and this elevated levels of crude? Do you think will they remain above that $85, $86 mark at least till the weekend gets over?
For crude, we don't expect a bigger correction in crude prices, even if there the news of any news that comes in from the US-Iran side, or whether they are going in for negotiations, or mediators say they are going for negotiations. But we maintain that the oil prices have found the range. With, if we see the WTI crude finding a bottom around $75, $78, while upside the Brent crude have found resistance around $98 to 100. So this is the range where we see oil prices remaining. We don't expect a bigger correction in crude prices. Neither we expect a runaway rally where crude prices can go past 120 or 140 in the near term. But if we look at this weekend also, we expect prices may see some correction close to $82 in the Brent crude, while the WTI may come down close to $77. But overall, if we see the broad range that we expect for the Brent would be between $75, 78 on the downside to 9,800 on the upside. While for the WTI crude also, we expect the prices to range between 70, 72 on the downside to 90, 92 on the upside. So this is the new range where we can expect oil prices to trade with in the coming months, until we get a complete clarity on what is happening on the US-Iran front, or whether the Strait of Hormuz is getting opened, the vessels have started passing in safely. So everything remains a little bit on the surprise side. When will this conflict end, and or whose patience will be run out first? Will it be US or Iran to make the deal? And finally we could see the Strait of Hormuz getting opened.
Nicely said, Pranav, but a lot of reactions are coming in the metal space also, especially the copper, which we spoke about. Some shortage issues are there, and where the volatility coming in the aluminum segment also. So which of these places, in this metal space, do you think the action is there and maybe a trade can be made as well?
If you're looking to really going for a trade, look for trades going into the copper price. Copper has been looking positive. There has been reports of supply tightness happening outside the US, because most of these stocks that are on the exchange counter on LME or SHFE have been shifting to US because of the Trump US president's tariffs when they were on refined copper. So when these tariffs are going to come, nobody knows. But this arbitrage opportunity is pushing the stock levels outside the US into the US, and that is what is creating the supply tightness for copper. If somebody is looking in for a positional trade, I feel this levels are ideal to start accumulating. If we get a further dip, it should be added. Prices have a potential to go further up of 8 to 10% even from current levels.
Right, Pranav. Thanks a lot for your views on the commodities. It's always a pleasure to have you with us at NDTV Profit, and best of luck for the future.
Thank you.
Let's move on from the commodities to the primary markets. The action is back. Gaja Alternative Asset Management IPO is in focus as the company is set to open on August 19. My colleague Nimit spoke to Gopal Jain, the Managing Director and CEO at Gaja Alternative Asset Management, talking about how investors should value Gaja and what it holds for the subscribers. Listen in.
Mr. Jain, thank you for taking the time, and congratulations on a marquee listing for the Indian market. First of its kind private equity AIF firm that you are actually going to market. I'd like you to put on your investment manager hat on for a bit before you look at yourself as a promoter today, and understand what category should people and investors, retail space especially, value you against in the current market, and how should they judge the company that you are? Should they do based on earnings, based on management fee, based on NAV? How should people, or AUM, how should people be judging you, and what category should they compare you against?
Sure. Thank you so much, Nimit. Well, we are following a proven global playbook, a proven global playbook that's been established over 60 years. So we are a private equity AMC. The fund is not going public, the AMC is going public. And it depends on where you want to compare us to. If you want to compare us on a global basis, we are comparable with other listed private equity AMCs. In India, we are, the closest that comes to us are other AMCs. An asset management company that manages funds. So the Gaja Capital's business is to manage funds, is to derive income through the management of these funds, which is management fee, carried interest, sponsor gain. We're a mature firm. This is a 27-year-old entity. It's a 22-year-old business. So it's no longer about vanity metrics. It's about hardcore elements such as profits, book value per share, earnings per share growth, and the addressable market, the growth of the addressable market. So you can pretty much value our share like a proper, script as a proper entity based on profits, profit growth, addressable market, your own impression of the future trajectory.
Okay, perfect. Fair enough answer. That speaking about your earnings, like you mentioned, if that's one of the measurable factors also, right? So in your FY 2026, you reported your carried income at about 75 crores, which is close to half of your total income. Now, can you explain why carried income was so much higher than the management income? And management income also over the last 2 years has come down a little bit. So what should investors expect in terms of when they look at the future earnings that the company will bring in? Should they expect carried income to sustain in this way? Because that seems a little unsustainable and it has a little risk. But management income is where your sustainability comes. So what is the message you have for investors when you talk about your carried income being higher than your management income?
So we are a 22-year-old firm. Carried interest is not lumpy, it is back-ended, but in our case it becomes front-ended. We derive income from multiple funds, and from each fund we derive management fee, we derive carried interest, which is, let me simplify it for the viewers, it is a share of the profits, and we derive sponsor gain. So our performance fee, which is combination of sponsor gain and carried interest, is always likely to be more than 50%. But given where we are, a 22-year-old firm, deriving income from multiple funds, mature funds, it becomes increasingly predictable and stable. We shouldn't be making a statement about the future, but if you look at our past, you will see a steady trend in how our income has grown, total income has grown, our total profits have grown, our net worth has grown, And if you have such long data, 22 years of data, then you're in a good position to say conjecture about the future. I also want to say share of profits is calculated on a fund as a whole, not on deal by deal basis. It's a European waterfall. First, we have to deliver the fund back to investors. Then we have to deliver a hurdle. So it becomes increasingly predictable and less prone to clawbacks. We applied a certain test to ourselves, the same test we apply to our portfolio companies before they go public. That are we confident of our total income profile, our profitability profile, and can we ourselves predict it? And based on these metrics is when the decision was taken by our board that yes, we're ready to go public.
Well, that's the interesting conversation with Gaja Capital Asset Management. But that's all, folks. We have now for the show. Do stay tuned to NDTV Profit. Up next is the Small Cap Show.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
लंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell. Hold. Buy. Sell immediately.
Confused? What to buy? What to sell? What to hold? Ask Profit with Mahima and Puneet. Monday to Friday, 10:30 AM. Only on NDTV Profit.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Well, welcome back. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar. Well, we are going to focus on one counter called RVNL. The company has reported a stellar set of numbers. Revenues were up nearly 10%, but the EBITDA jumped nearly 3.3 times, and margins came in at close to 4.3%. Now, my colleague Parth spoke with the management of RVNL. Let's go across to Parth for that.
Well, interesting set of numbers have been posted by RVNL, and we spoke with the management of the company. We are joined by Mr. Salim Ahmed, CMD at RVNL. So to start off, you had guided for a revenue growth of 15 to 20% in FY27. So after Q1, are you still on track to deliver this guidance?
Thank you, Parth, for giving me this opportunity to interact with you and your viewers. No, definitely we are on the track. As you rightly said, our targets are revenue top line growth of 15%, and we are expecting and hopeful that our profits will grow by 15 to 20%. As you have seen in the quarter one, our performance has started on a good note. We have achieved almost 11% rise in the top line compared year to year, and the bottom line has also increased by 19%. And as you know, quarter one is slightly weak and sluggish compared to other quarters. So we are hopeful in next 3 quarters we will improve and better our margins.
And what is the current status of your order book? Are we expecting any big orders to come in the coming months?
Yeah. Presently, our order book is almost 93,000 crores. And if you see in this quarter, we have got orders of almost 5,500 crores in this quarter. So we are expecting that we will get more orders in the coming quarters. And, you know, we are focusing more on PMC works also. We are focusing on overseas, and we are focusing on the new sectors like hydro. We are focusing on the port sector, and we are focusing heavily on the overseas, especially the Africa continent.
So with the current order book of 93,000 crores, like you mentioned, so how does that mix will look like? Is it an equal contribution between the railway and non-railway projects, or we are seeing an increased contribution from the non-railway projects at this time?
Definitely, railway is a core sector for us. You know, almost our 40% of our order book is with the signed works of the railways, and 20% work we have got from the bidding. So almost 60% of our order book is with railway works. But we are diversifying into new sectors, as I briefed you, that we are focusing heavily on ports, hydro, clean energy, and overseas. So we are expecting that, you know, our order book will be 60-40 this time. But definitely in next 3 years, we are hoping that it will be 50-50%. 50% from the railway works and 50% from the non-railway infrastructure works.
So once that railway to non-railway mix becomes 50-50, how does that impact our margins going forward?
So definitely, you know, in railway works, where the works are given to on management basis, we are getting better margins. But when we go to the market and pick up work from the bidding works, the margins are slightly less. So that's why our focus is on the new sectors like overseas, where we can get 15 to 20% margins. And in other sectors like hydro, port, and clean energy, margins are better. So we are trying to diversify our order book and balance it, like with the good margins works and some less margin. So like it's a balance. And we are hopeful that whatever margin of 15 to 20% we are expecting in the bottom line can be achieved.
Understood. And how much of that current 93,000 crore order book is executable within FY27 and also FY28 and beyond that as well?
We are expecting a increase of 15% in our top line. So last financial year it was 20,000. So we are expecting a revenue of around 23,000 top line. So accordingly, I think our order book will be executed. But parallelly, we are getting good works, on a quarterly basis. As I told you, 5,500 works we have got in Q1, and discussions and talks are going on with various state government, public sector units to get the works on the PMC basis. So we are hopeful that our order book will continue growing on a regular basis.
And also, sir, the BharatNet project was quite a big one. It was expected to contribute a lot towards both revenue and profitability as well. So has that execution reached the pace that we were expecting in the initial point?
The BharatNet is a quite challenging project of BSNL, providing connectivity. And we are doing work for UP East and West. So work was slightly sluggish and slow in the initial phases, but now it is picking up. So definitely a good contribution will come from BharatNet for the top line. And the margins are also good here. Around 6 to 7% margins are there. So we are expecting good revenue stream from BharatNet in this financial year, including the profitability.
Well, thank you, Mr. Salim. That was the management of RVNL speaking and giving guidance for the future ahead. Well, back to you, Somit.
Well, thank you, Parth, for that. Moving on from RVNL to RK Swamy, that company has also reported its Q1 numbers. To understand more about the quarter gone by, we are joined by the management. We are joined by the management of RK Swamy. Rajiv Newer, the CFO of the company, is joining us. Sir, firstly, to start off with, when you look at the margins, the EBITDA margins have increased by around 200 basis points on a YOY basis. Is this number sustainable for the full financial year, or there is a room for further expansion when it comes to the EBITDA margins?
So thank you firstly for having me on the show. Before I answer this question, let's take a step back and look at how our performance has been for the last couple of years, last year and last quarter, because the answer actually lies therein. So if you look at this quarter, obviously the EBITDA has gone is higher by 32%. Higher by 24%. If I was to look at last full year, which is FY26, the EBITDA was higher by 32%. Let's take a step. Let's look at it from another lens. If I was to look at the revenue, last year the revenue was up by 15% year on year. But more importantly, I always believe that we should not look quarter on quarter. We should look at over a longer period of time, because that really what gives you a true perspective. So if you were to look at the last 5 years per se, then in the last 5 years, the revenue has grown at a CAGR of almost 14%. And therefore, what is very important is that if you look at our brand strategy, that's we have been continuously investing in infrastructure. We have been continuously investing in onboarding high quality talent. And we have been constantly working on building scalable processes. And what you see essentially is an outcome. So, this is a comma and not a full stop, because the show continues. We continue to do this because all the initiatives that we have taken in the last 1 year have started yielding results. Last year, we added a lot of infrastructure to our CX business, to our CATI business. As we speak, the occupancy is hovering close to about 80% plus on the expanded capacity. We are in the process of setting up a new digital video studio, which should further augment our capacity to build content at scale. More importantly, if you would look at this quarter alone, we did the Padma projects, which basically where we did a lot of videos, and that's basically, and that too in multiple languages. So the fact is that we have been investing, and what you see in terms of result is an outcome of what we have been doing so.
Talking about the digital studio expansion, if you could give us more information on that front, what could be the incremental revenue, what is that basically, and how will it benefit your financials on that front, if you could share some details?
So, digital video studio is one of the elements that is going to contribute to our growth. That's not the only element. Now, if you first of all understand our business, the business is basically an integrated marketing services. So when we talk about integrated marketing services, it's where we bring together strategy, creative, media, research, and customer data analytics, all under a unified framework. So instead of working in silos, all these disciplines collaborate from the very start of a client engagement. And what this leads to is better decision making, sharper targeting, basically making sharper targeting, basically improves our execution and strong accountability for outcomes. For us, integration is about scale. It's not about alignment. Now, where does a studio fit into all of this? When one of the elements that is a part of the integrated marketing services offering is creating content. And we have a studio, but we have been creating content at scale. And what we have realized is that the studio has served its purpose, but we really need to expand the capacity to be able to create more content at a faster pace. And therefore, the need to create another studio. We have signed an LOI for a certain location. We are in the process of diligence. And hopefully, if all goes well, by the end of the year, we should have the studio in place.
If you could just tell me, how are you looking to expand your marketing infrastructure? How are you looking to add talents here? Because I believe that's the core for your business.
No, absolutely. Talent is fundamental to our business. Talent is core to our business. And we have been onboarding talent over the last couple of years because without talent, we don't exist. No, honestly, this is not a factory setting. We need talent here. And so what we are doing is that we have been, as we add more disciplines to our business, we are adding specific talent to those disciplines. For example, if you look at our sectors that we cater to, BFSI accounts for almost 1/5 of our total business. FMCG accounts for almost 1/5 of our total business. Automotives account for 1/5 of our business. The other interesting space that we have and identified is the pharma and the healthcare space. And that's one space where we have been onboarding a lot of talent and we have been trying to grow our presence, improve our talent pool in that space. Apart from that, we have also created a new discipline, which is called brand and marketing consulting. Now, brand and marketing consulting is basically a value accretive business for us, which basically harnesses all our capabilities, whether it is creative content, whether it's media, whether it's research, whether it's analytics, and gives a very holistic solution to the client. So we have been onboarding talent in this brand and marketing consulting space.
Right, sir.
Apart from that, as businesses grow, we continuously are onboarding talent across our disciplines.
Okay. Well, thank you, sir. Thank you for joining us and giving us the way forward for R.K. Swamy. Moving on to our fundamental guest, Avinash Gorakshakar. Avinash, you heard the management. At the current valuations, what would be your recommendation on this stock?
No, I think Sawmill, after a long period, R.K. Swamy has reported a decent set of numbers. I think the profit growth has been quite good, 26% compared to 7% top line growth. I think the market would like to see consistency in numbers because, for the last 2 years, I remember after the IPO, the stock has not done that well. So I think markets will like to see what is the consistency in these numbers. But the good part is the company is a free cash flow generating company. They don't have any debt on the book. So hopefully, I think this year should be a good year for them. And at these levels, I think one could definitely look at accumulating a small quantity because they are definitely very old players in the advertising market. And overall, the management seems to be confident, from the commentary mentioned now. So we have a positive view, but we like to wait for another quarter or two to actually take a final call. But yes, the valuations now are very attractive since the stock has completely bottomed out.
Okay, and sir, just wanted to discuss one more counter with you. Azad India Mobility, in the last 1 month, the stock has seen quite a traction. What are you picking up here? What's your view on this counter?
I think, Somit, today the company is going to post its numbers. Today is the board meeting. So we like to wait for the numbers, but this is a bus manufacturing company and basically, again, not very highly leveraged. So we like to see, what kind of numbers are thrown up in the first quarter. But typically, I think what the stock is actually being interested from our side is because it's a very interesting business. They make complete bus bodies for, basically transporters as well as for private, kind of players. And this is a large growing business. So we are hopeful that the business will turn around in the current year. But we like to see the numbers after the board meeting is announced. That is today.
Well, with that, let's slip into a short break and we'll be back with more small cap stocks on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
पीओके के फायरिंग रेंज में खड़े हैं.
Just few inches away is POK.
तो हो सकता है दुश्मन को पता हो कि सैफ अली खान यहाँ पर खड़े हैं. Is it fire?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold, buy, sell immediately.
Confused?
Welcome back. You're watching Small Cap Buzzers. Now, HLE Glasscoat is a company that we need to focus on. The stock has fallen nearly 35% in the last couple of trading sessions. Right now, it's trading up around 3% What has led to this fall of more than 30% in the share prices in the last 3 trading sessions? Let's get in Shivam to understand more on this.
Yes, so actually Glasscoat has snapped 2 session losing streak. In fact, in previous 2 sessions, firstly the stock has fallen around 20%, and then yesterday it had fallen around 10 to 11%, and today we are seeing this slight uptick in this stock, and the volumes of in this stock has also gone up by around 2 times. So let's look at the what were the key factors that have affected the stock. So first one is the weak Q1 performance. The revenue of the company has remained modest despite there has been a healthy demand environment. In terms of profitability, that was impacted by the delayed delivery acceptance of certain key orders, and that has been witnessed in the heat transfer segment, on which the revenue has also declined by around 72% on YY basis, and that's why we are seeing a EBITDA loss. In terms of order book, that has remained healthy, which has increased to around 713 crores as of July 31. Also, in terms of segmental highlights, if you look at the glass line products, the revenue has seen a robust growth of around 49%, while the filtration, drying and other equipment and the heat transfer segment has seen a decline in the revenue growth. In terms of outlook, the company has said that the demand recovery is visible across the end user industries, and in terms of demand recovery, it will take place in the second quarter. In terms of opportunity pipeline, that has remained healthy, and the company is diversifying its presence to support the future growth too. In terms of order book, that has momentum has remained very improved, and in coming quarters, and in management remains positive in the recovery in the industrial capex activity. So overall, the weak results has made the stock fall so much, but today it is seeing an uptake of around 2 to 3%.
Avinash, HLE Glasscoat, poor set of numbers, the stock has been punished around 30% odd. After that, is it in the value buy zone now?
I think the stock needs to correct a little bit further, Somit. But one interesting part is that the operating cash flows for this company has been very solid. Like for 26, I think they did a EBITDA of around 140 odd crores. Operating cash flow. So basically, the operating cash flow conversion to EBITDA has been very solid, almost 80 to 85%. So these kind of companies, whenever there's a bad quarter, and I think if the order book is pretty solid, bounce back is also equally good. So I would say that it's better to observe the company's numbers for another quarter. They are in a very specialized business, especially the glass lined kind of reactors, which I think largely go to the pharma sector. So I would say that those investors who have should hold on, and fresh buying can be considered on maybe some more market decline, but definitely worth tracking and having into your portfolio for a long term kind of time.
The next stock that we'll be talking about is Suraksha Diagnostic. Now, if you look at this stock, after reporting its numbers, it's gained around 13 odd percent. It has been buzzing for the last couple of sessions, also on the back of the new IPO that had come in, Mobilo Diagnostic. But let's get in Varsha to understand in detail what has played out for Suraksha Diagnostic in the first quarter of FY27.
Well, overall a strong set of numbers, I would say. Revenue was up almost 21%. There's a good margin expansion as well, at 34% versus 33%, and if you see net profit is up 44%. Now talking about volumes which remain strong for the company, patient footfalls increased to 0.38 million. You have 2.1 million tests which has been performed. Network expanded to 72 centers, and B2C business remains core or dominant at 91% of the overall revenue. Talking about realization, so the growth is not only coming from volume but from realizations also. Revenue per patient increased to rupees 2,321. EBITDA per patient also rose to 835, and the growth is just not coming from volumes but from better monetization. Genomics, which is actually emerging a next growth lever for every diagnostic company, and this is also true for Suraksha, which grew. The genomics revenue grew almost 136% year on year. They also reported 5 consecutive quarters of sequential growth when it comes to this segment. Management sees genomics becoming a core or meaningful business over the next few quarters. Well, margin story, if I were to talk about, centers older than 2 years reported 40% of EBITDA margin, and the younger centers reported almost 6.5% of EBITDA margin. As scale benefits are actually starting to flow through the network. So overall, you have volume growth, you have realization growth, and also the margin has also seen a good spike.
A solid set of numbers coming in from Suraksha Diagnostic. Is the valuations now expensive or still in the buy zone?
I think it's a hold. Best part is Suraksha Diagnostic is largely a B2C player, Somit, and I think most of these companies, if you look at Thyrocare, you look at Vijay Diagnostic, and now Suraksha Diagnostic. One good thing is that the market has now turned favorable. There are very few price cutting, news flows in this industry. So I think the momentum should continue, and if that happens, then I think definitely Suraksha is definitely a reasonably good bet, considering that it's directly catering to the B2C segment. Typically, B2C diagnostic players get a better valuation kind of matrix. So we have a constructive kind of position. We have a hold on the stock. Any dip should be used to buy the stock. I think today the stock is up by 10-11%. So once the stock cools off to reasonably good level, then I think one could accumulate.
Well, thank you, sir. Thank you for joining us and giving us your perspectives on the stock that we discussed on the show today. Well, with that, it's a wrap on this edition of Small Cap Bazaars. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबां केसरी।
कायर हम नहीं जो पीठ पीछे वार करे, शेर को भी जगा कर शिकार करते हैं।
आप सिंदूर के समय की जो सिचुएशंस थी, क्या हुआ था उस टाइम यहाँ पर?
हमारे सारे स्ट्राइक्स प्रिसाइज, मेजर्ड और एनिमी के टेररिस्ट कैंप्स पर थे।
पुशअप चैलेंज किया जाए 28, 29, 30।
तंबी कैसे? टाइगर कैसे?
Celebrating excellence across journalism and innovation, NDTV steals the spotlight at the 12th BCS Ratna Awards 2025-26. Best English News Channel of the Year, NDTV 24/7. Best News App of the Year, NDTV. Best Election Coverage of the Year, West Bengal Election Coverage. Best Podcast Show of the Year, NDTV Control All Defense. Best Primetime Anchor of the Year, Syed Suhail. Best Female Anchor of the Year, Vasudha Venugopal. Best On-Ground Coverage of the Year, Operation Sindoor Coverage. NDTV, the network of impact.
Buy now, sell immediately. Hold it, boss. Buy now, sell, hold.